Hi, I'm Lior Lustig. From Nadlan Capital Group, we make your real estate dreams come true. Mortgage rates have been steady for months, but that calm may be about to break. All eyes are on the Federal Reserve's December 10th meeting, which could be the most important rate decision in more than a year. For the first time since mid-2024, a rate cut is not guaranteed, and that uncertainty is already shaping market expectations. According to Fed funds futures, investors see an 85% chance of a cut next week. Normally, confidence would be above 95% by now. That gap matters because it means the market could still be surprised. But here's what many borrowers don't realize. Even if the Fed does cut rates, mortgage rates may not fall. Mortgage rates are driven by the bond market, which focuses on long-term economic expectations, not just the Fed's short-term rate moves. One of the biggest drivers this week will be the Fed's dot plot, the chart that shows where each Fed official thinks rates should go over the next few years. It is released only 4 times per year and often has more influence than the rate decision itself. That means we could see something counterintuitive. The Fed cuts rates, yet mortgage rates rise. If the dot plot suggests fewer rate cuts in 2026, the bond market could react by pushing yields higher immediately. Fed Chair Jerome Powell's press conference adds another layer of uncertainty. 30 minutes after the announcement, Powell will speak, and his tone can move markets dramatically. If he signals a slower path for future cuts, mortgage rates could rise, even if the Fed just eased policy. But if his comments lean dovish, rates could drift lower. Meanwhile, another major piece of the puzzle is missing: the October jobs report. Because of the government shutdown, it was never completed and won't be released until December 16th, along with November's report. Without this key labor data, traders are hesitant to make big moves. The one early signal we will get is Tuesday's job openings report. Thanks to the unusual reporting schedule, it will be the first meaningful look at October labor conditions and could move the bond market before the Fed meeting even begins. Put it all together, and mortgage rates may be nearing the end of their months-long sideways pattern. Between the Fed decision, the dot plot, Powell's comments, the job openings data, and the delayed employment reports, the next week could bring the biggest rate volatility we've seen in months. For now, rates remain near the lowest levels in almost a year, but the quiet may not last. For direct financing consultations or mortgage options for you, visit Nadlan Capital Group.